JBlog, 13th of May 2009. Looking at the S&P 500, can see that the uptrend that started back in March has been broken. We have this. It's not quite a channel. It's a bit of a wedge, but it's close enough to a channel to pretend it's a channel. We have this broken. The lower trend line is definitely violated today. On Sunday's blog, I was stating that I was starting to get worried, mainly because the attitude was getting entirely too bullish out there, and I was bullish down here. And when people start getting bullish with me, ultra bullish with me, then I start getting worried. So I decided to liquidate my long positions and actually take a short position on SKF, which is the financial inverse, the ultra financial inverse. It's the ultra of the XLF, and that was, looking at today, that was definitely the right thing to do. So we have a violation here. Looking at the stochastics were overbought and are starting to just dip below the overbought side of things. Looking at the whole chart, going back 6 months, or even let's go back a year. Going back a year, we see this phenomenal drop here. We see the channel. We see the channel being broken, and now we see this point here, which I believe I pointed out as a possible resistance point, actually being resistance exactly here. And I'm expecting a rather substantial drop from here. This rally from up here down to there, this drop here was a substantial drop in the rally, which is either a first leg of a bull trend or the another bear rally. It's quite unclear what it is right now. We'll have to wait. But that was a 39% retracement, and we could be looking at a 60 to 70% retracement of the retracement, which might take us all the way down to 750 perhaps. I'm just guessing here, not doing a calculation, but this would set us up nicely for a head and shoulders, an inverted head and shoulders, which could then start a new bull market. I don't see this as being particularly negative, but this is definitely a correction, because this was a very, very strong rally in a very short time period. There's a few things that alerted me to that this might be in the works. One of them that I pointed out before was a breakdown, a non-confirmation in the OBV and the on-balance volume, that even though the market started making newer highs, the on-balance volume failed to make newer highs, so that was a non-confirmation. That sort of worried me. The stochastic was very overbought. This, by the way, is the New York Stock Exchange composite, all the stocks on the New York Stock Exchange, which is includes all the small stocks as well, unlike the S&P 500. So I like looking at this as the master index. This is really what is important to look at. If you look at the S&P 500, which is pretty good, but it's only 500 large stocks, it doesn't include the mid caps or the small caps. So it's best to look at the whole spectrum. And here's a weekly chart of the New York composite, and you see that this week is now Wednesday, and it has almost retraced the entire run up from last week. If we actually drop below this in the next 2 weeks, in the next 2 days, we might even be looking at a bearish engulfment, which would be pretty ugly. I expect this move to be a multi-week move. I'm not going to sell my SKF longs just now. I will wait. I haven't added to the position yet. I might add to the position. I actually like to add to the position, but I wouldn't mind a little bit of a pull-up before I add to the position. But for the time being, I'm just sticking with what I have. I got out of a lot of my longs. I've sold options against some of the longs that I'd like to keep. I've established some diagonal spreads and vertical spreads on some of the option positions that I had, and I took this position in SKF because that I believe will be the fastest mover, where I can look at a doubling to perhaps tripling of my investment. So for the time being, it's nothing new, just as outlined on my oakwise.org website. It follows every trade that I do and what I'm holding and what I'm thinking at the time. So you can take a look at that if you want to. That's my feedback on the market for today. Thank you very much.